Hi guys. Okay, so Josh FX Pro here. We're back again. Okay, there was a trade that we're following yesterday. That's a VIX 75 1S index. Okay, and this is a trade update on that trade because man, it's been crazy. The whole of yesterday was crazy, man. But finally, we got our entry and we're moving already. Okay, I'll show you what I saw, finally how I got my entry and how I started in the trade. Okay, so um this is today. Should I do a top down? I don't think there is a trade update, so I wouldn't do a top down. All right. So yesterday we're just we're just ranging around this area around here. Market was ranging. Initially we saw the break, you see? There was a break, candle close, candle body close below the last low. This is why I use body, right? If I was using a wick, I might not get there at that point, right? But this is why I use body close because body close would indicate that market has actually changed direction. Okay. So now we understand that has happened. And now what we had next was market was just consolidating around this area. You can see it formed a high, broke it, came down low, broke the high, broke the low, broke the high. Like market was just doing anyhow, man. So finally, I saw that what market was trying to do, it was trying to come back to these 4 hours. I had my order block session around these points, at these points. So, but there was one other order block here because remember, our low was here. Our low rather is here between after the break between here and here. This was where our high was. I'll show you this. Let me clone it. Yeah, this was where our high was because if you notice, market moved all the way from here down to this point. So where our trading range is between these 2 points. That's where our trading range is. But on a daily perspective, our trading range is here. Our top trading range is here between these 2 points. So we're trading between here to look for sales value. And on the 4 hours, we're trading between once we saw this was the last low that broke off a high. So if this low had broken off this high, right, we would have considered this as the last low. All right. So, but this was the last low that took out the high, and we're in between these points after the low. This last low has been taken out. This is now kind of like your change of character point. This is kind of like your change of character point. So we had between here and here all along. So market was just ranging, taking off highs, taking off lows, taking off highs, taking off lows at this point. So unknown to us that this was an inducement move. It took me out on break even somewhere here on 1 hour. I think it was on 1 hour. Yeah, it was on 1 hour somewhere here. It took me out on, so you remember I put my entry here. So I later moved when I saw market didn't close below this point of the consolidation, I just moved my stop loss to my entry. So this next candle took me out on break even, right? Just because all these were inducement for liquidity to be grabbed, right? It was inducement for liquidity to be grabbed or swept, however it is. So finally, market did market did a push up to that location to the 4 hours middle order block to this order block here, the highest order block of that point. Tapped it, came down and gave us a sweet engulfing. And this engulfing was around 5 a.m. this morning. You can imagine I followed this market to 5 a.m. this morning. I was just saying, okay, if this market breaks off body close above this point, then I know that it's an invalid setup. I was just waiting for it to break off that point. If it had broken up that point, it's an invalid setup. If it didn't, then I would have to wait to see what happens next. So when I saw this candle, push down, close below this, all these lows here on 4 hours, I knew that my entry was sure. So I didn't bother to go down to 1 hour to check the entry, or to see the entry rather. I didn't bother to go down to 1 hour to see the entry. I just saw this on 4 hours and I took it. But if you were trading 1 hour, you probably on by that 5 o'clock, you probably would see a retracement. Okay, you see, you would have probably seen this retracement. Let's say 15 minutes. 15 minutes. Yeah. So 15 minutes give us on the other block of 15 minutes, this other block here. After this push that broke off all this low, there was this other block here. The market respected. I say other block on the fair value gap, rather. There was this fair value gap here. The market respected, right? So market came back, tapped on the fair value gap, and did some multiple. So if you had entered here and put your stop above this, above the middle line, or at the middle line of the 15 minutes fair value gap, you would have still been in profit, right? Yeah, you would have still been in profit if you had entered on this hammer or gravestone doge, right? You would have still been in profit. So coming back down. So it's a good trade, and we're in it. It's going to run for a while. So for now, I'll leave that trade. So that's the trade update. We are going down. Trade is going down. So peradventure, this market may come back after taking out all these lows. Now it may come back to tap on one order block or something, because it's going to be a long ride. It may come down. It has taken out this low, so it may come back to probably tap on fair value gap, order block area before continuing the other way. But watch out for it. Today is Sunday, so probably on Monday we may see a spike up, a retracement. So if you miss this entry, try to catch the retracement, okay, and continue downwards. It's going to be a long ride. Remember, our daily this thing is here. Our daily trading range is here, right? Yeah, our daily trading range is here. So if you can catch it, my TP is just at the body of this candle here, the low of the body of the candle here. That's where my TP is. So it's about 1:6. Yeah. So if you can catch it, catch it. If you can't catch it, then let it slide. But make sure you follow up the trade, all right? So this is a trade update for this particular pair. And I want you guys to subscribe, follow, drop a like, comment, drop your comment on what you think about this pair. It's been a tough day, really. It's been a tough day. But as a trader, this is why you apply risk management, so that you don't get to burn out. You don't get to burn out. If you're managing $100 account or $1,000 account, 10,000 or even a $10 account, right? Make sure you apply good risk management, so that when market clears you out, probably as liquidity, then you would be in a better place to enter again when market comes back. All right. You'll be in a better place to enter again when market comes back. So please, and keep showing up. Show up every day, every single day. Show up. don't don't say I had a bad day yesterday, so I'm leaving the trade. Yes, it's good to leave the trade, but I would advise that you keep showing up, even if you're doing that just for you to what do you call it? Just for you to analyze the market, just for you to backtest the market to see what's going on. In fact, do more backtests. When you have a losing trade and you have a wrong mentality or mindset, your emotions are spiking, do more back tests. Back test, just keep doing back tests till your confidence is back. Keep back testing, finding out why the market moved, what made it move, what instigated the movement, where did they induce price so that they can take people out on liquidity and all of that. So keep doing your back test. One thing back test does for you, it gives you back your confidence, and it brings you back to the understanding that this thing still works. You were just on the wrong spots and over risking and over leveraging your account, right? So, but then just do what you do, and the best risk to reward ratio of risk management is 1:2. Just, I did not say use your whole account to make two of it. No, you can divide your account into 10 places. If you have a $100 account, you can take $10 per trade. All right, make sure you risk $10 per trade to make $20 per trade. So if you do this, that's the best, right? If you do this, you'll find out that you're more or less not in a losing trade. You're in a winning trade most of the time. So whether you do 1:2, 1:3, if you notice in this channel, I do 1:2, 1:3. Rarely do I do 1:4, 1:5, 1:6. If I do 1:6 and 1:5, you know, my initial plan would be 1:3. But then when I see that the market has a tendency to go further, right? I take out my stop loss, my TP, then I adjust my stop loss. I keep trailing the stop loss. I just keep trailing it and trailing it. So that's just what I do. All right. So for now, see you guys, and I hope you got a lot of lessons from this market. I'll be dropping some backtest videos very soon. We are backtesting what happened last week, the whole of last week, and let's see what the market gives us, and let's see how we can refresh our memory on the strategy that we are currently holding. Okay, so for now, have a good day and happy Sunday, guys. Take care of yourself. See ya.